Blue Jay fan. Eric, you a Blue Jay fan?
Hey, they've been horrible for years. They're having a decent season.
Not bad to get on the Blue Jay bandwagon at this point in time. We're Tiger fans, and the Tigers are obviously been doing pretty good too. Hey, maybe the Tigers and Blue Jays will meet up here at some point in time.
I mean, I grew up. It was all AL East, Tigers, Blue Jays. Doyle Alexander. You remember Doyle Alexander?
Oh,
Foil yeah. Doyle. Foil
Oh, yeah.
Doyle. That's what the Toronto fans used to shout at Exhibition Stadium.
It was good. Eric, your mic's just a little bit.
Nobody gets that reference on this stream. Sorry, guys.
Your mic's just a little bit light right now. If I don't know if you can turn it up. If not, it's okay here too. If you don't know Eric Jackson, a lot of people call you Carvana guy because you made the bold call that Carvana, was going to make the biggest comeback ever here, and it absolutely did. I mean, we go back and look at Carvana. It was a $300 stock, got murdered in 2022, 2023. A lot of people thought this stock was going out of business. You did not. You got behind it, and the stock has exploded back from $3 to $342 here today. So it was a great call by you on Carvana. And now you're making a new call here, and we've seen you in social media, and you've got a little retail army behind you too. Open Door is your new call. Talk to us about this story here, like the fundamentals. Why is Open Door potentially the next Carvana?
Okay, well, 3 years ago, I was on a podcast, Josh Brown, Michael Batnick, Compound and Friends, and we were talking. And so that was in the middle of 22 when all of tech was melting down, crypto was melting down. It just seemed like tech would never come back, like it always seems at bottoms. And of course, they asked me on the podcast, okay, well, what's, name names, Eric, what's a stock that's actually going to come back from the dead? And I gave them two, and one was Carvana, one was Open Door. And actually, I was more confident that it would be Open Door that made the turnaround, but they didn't. They're very similar businesses. One's building an online platform to sell used cars, obviously, Carvana, and one's building an online national platform for selling houses. And in the case of Carvana, they're trying to disrupt the traditional car dealership model and take that margin for themselves. And in Open Door's case, they're trying to disrupt the whole agent model and say, why pay 6% to these people that don't do much and have a much better experience just going through us. And both need a lot of debt to fulfill their strategies. Both were rewarded before interest rates got hiked for just like running flat out towards growth. Damn the losses, damn the torpedoes, and take on as much cheap debt as you need to fulfill this business plan. Obviously, Open Door came out in the SPAC as a SPAC or a D-SPAC. Carvana came out, IPO'd in like 16, 17, something like that. So Carvana has loses less money because you're dealing with cars, so lower price point. So it's a more difficult business model for Open Door with buying and selling houses, and obviously the reason why both of them got smashed and basically were left for dead was that the market lost faith that they were going to continue to live. They thought they were both going to file for bankruptcy. So Carvana goes from $400 in 2020 down to a low of $3.50 in December of 2022. In the case of Open Door, they went from a high of all-time high after they de-SPAC'd of like $39 down to, on June 25th, 51 cents. And so now Carvana, like you said, made it all the way back. It's like 340, 350s now, but it was like it broke 400 a couple of weeks ago after they had really good earnings. And I think they're going to be back there again. So, there are differences. I mean, I sort of pointed out the similarities. I mean, the differences are basically like gross margins are a little bit more difficult. But, what I saw in the case of Carvana was that basically what happens a lot of times in public markets is that like once the story and the narrative changes, people just like leave, forget about the company. They just, and they stop looking at it. Now, if it was like a private company with which these like tech Silicon Valley elites support, and they never have to market every day in the public markets like we see with all the stocks that we trade, it would be different. But these guys in the shadows, they just like, nobody likes to hurt anybody's feelings. So you just like mark it up, mark it up, mark it up. So, I think Carvana, got down to sub $1 billion market cap, a few hundred million or something, but they were making changes. They were making progress. They obviously got the message that they had to start making money. And, eventually starting in 2023, they got to that sort of steady state profitability and viability as a business. And they were able to renegotiate their debt and kind of take that risk off the table. So, had they been a private company, they would have, been marked way up, but the public market just didn't care. And the same thing sort of happening with Open Door. Like basically, what has to happen for a major re-rating and for Open Door to open to 100x is that they've got to prove that they have a viable business, which means they've got to prove that they can get to steady state profitability. They just reported one quarter that was their first EBITDA positive quarter in 3 years, so that's a start. But they've got to like prove it now continuously. And then secondly, like the other thing that the Open Door playbook is, they don't make Carvana doesn't make most of their money or hardly any money from buying and selling the cars. They make it from finance and insurance. And then they make it from other stuff that they package around it. It's a platform. It's not an app. And what that means is you sell other stuff when you sell this thing. It's not just one thing. You're not just selling margin on cars. It's like everything else you can sell around it. And that's where they make their money at scale nationally. And that's what Open Door has to do. They have to get beyond just iBuying. They can probably, be more efficient and, cut costs in their own business, make some money from iBuying, but they got to sell mortgage and title. They've got to get into AI. They've got 10 plus years worth of great data about the US, real estate market. They could be like the Bloomberg of that data, selling it themselves. They don't even need to partner with an OpenAI or a Palantir. They could do it themselves if they actually hired some smart people. So there's just like multiple.
Well, speaking of that, I'm going to interrupt you here because at breaking at 9 a.m., and you probably know it, your phone's been dinging in the background here. You've been calling for new leadership here. And unbelievably, live on this interview, Open Door announces that Carrie Wheeler is stepping down and the company is beginning a search for a replacement. You've been calling for this. So Open Door announces CEO search is well underway here. Breaking news here. I mean, something you've been calling for here, Eric. What are your thoughts as Carrie Wheeler going down? So now, maybe we do get some new leadership that this company absolutely needs.
That's awesome. I didn't know. That's amazing.
That's why you got to listen to PreMarket Pro.
I'm so glad I hopped on the live stream to experience this live with you guys.
That's awesome.
There's not one single thing that could have helped this company more than getting her out the door. Like it was ridiculous. Her performance a week ago or whenever it was on that earnings call was just horrendous. She's obviously like a corporate finance robot. She's not the person to run a tech company and build a tech platform. And I had all these whiners on like Discord server. Eric, you're being too mean. You got to be nice. You're going to tank the stock price and all this kind of stuff. I'm like, are you listening to this person speaking and like describing what she plans to do? And has she ever articulated a plan to get this thing to $82? It was ridiculous. And then she like the whole song and dance that she was going to go and do an interview with Anthony Pompliano on Monday and stuff like this. Anyway, she's in the past. I think what needs to happen now is Keith Raboy, who's the guy who actually wrote the original business plan for Open Door, is like, I think he's the smartest guy in tech. He's got to come back on the board. He probably will bring Eric Wu, who was also a co-founder of Open Door and was the first CEO before Carrie. And they got to pick a CEO. And I trust people like that to pick the right tech-focused, product-minded, Ernie Garcia type. One thing about Ernie Garcia, which I think it's worth pointing out, when his stock was going from $400 to $3.50 in 2022, Ernie Garcia bought $70 million worth of Carvana stock on his own dime. Now he's a rich guy, but $70 million is not couch cushion change. And, he put that at risk. He believed in it. And he had two guys on his management team, one who bought $2 million worth of stock at $7.50 in Thanksgiving 2022. And he's the chief product officer. Like guys like that never make big open market purchases. And some other guy bought $700,000 of Carvana stock. So these guys like put their money where their mouths were. And we need the same thing from Open Door. You know, Carrie and everybody else on this board have just been selling, dumping shares on retail. You know, it's like, you know, it's ATM money, free money, found money. We got to get an founder's mindset back in this company. And this thing can go to 82 and then 200.
I don't know if you noticed, last night 13Fs came out. Paul Tudor Jones actually took a position in Open Door here too. So you're getting some like names behind you here now too. I mean, it starts with, you know, a retail community here, and obviously you're well followed in the retail community. But Paul Tudor Jones is not like a little retail trader. This isn't, you know, a gun here. So it looks like he took a position in this too. And the stock's up 15% right now. So they are liking that Carrie has stepped down here. You know, so just thoughts here as you get some real backing here, you know, with Paul Tudor Jones coming in.
We could be in for another God candle today. This thing, you
God
know,
candles.
Nothing that makes guys more excited than God.
What's a God candle? Just a big blast off.
You know, the green candles to the sky. You know, like it's more exciting than you know, any Sydney Sweeney ad for sure. So I think the Paul Tudor Jones thing. That's important. One thing that's important to point out though is that when we see like Buffett bought this and Paul Tudor Jones bought that, that's for the Q2 quarter. So that's ending June 30th. And it seems like this Open Door campaign's been going on for months, but my first tweet about it was July 14th. So basically, like, you know, at the end of June, like June 25th, Open Door was a 51-cent stock.
Yes.
At 56 cents, Carrie was selling a bunch of shares at 56. Like, who does that?
She's not a very good trader.
In the past. Well, she obviously thought it was going to 25 cents. That's the only reason why she was unloading at 56 cents.
Yeah.
Anyway, I just think like there's a lot of buying that's happening now, I'm sure, by big institutions this month of July, but they can't, they won't have to show that until the end. So Q3 will end in September, and then they won't have to report
45 days.
Yeah. So we're talking what, November 15th?
Yeah, it'd be October 15th, I believe. If Brent would know that in the background, he covers it.
Well, 45 days after, right? After September 30. So it should be.
Yeah, exactly.
November.
Oh yeah, you're right. No, November 15th. You're correct. Yeah, 100% correct.
So it's like still a long. You know, we're really not going to go you know, what's happening in real time until then, and basically Thanksgiving.
Give us your intentions for this stock, because are you just holding? Because some people are saying, oh, it's a pump and dump. He's just pumping it up. But I think a pump and dump is like, you actually got to dump the shares. You're not intending to sell these shares, are you? Like anytime soon? Like you're saying $82. I mean, $82 is a long ways away, but this isn't like something that you're going out here to like, I'm buying a whole bunch of stock and the retail frenzy, I'm going to sell into that. You aren't looking to sell shares.
I mean, like we got Carrie stepping down. We're going to get some new hotshot CEO who actually knows something appointed as CEO relatively soon, probably a reframed board. And there's a huge, I don't know, it depends who you ask. There's like 23% short interest or something. Why can't this be a legitimate, you know, GameStop type squeeze? Why couldn't we get to $82 this year? I mean, I don't know. Like it's just GameStop wasn't a real business. It was a crappy little business. You know, like all these meme stocks are always terrible businesses that I would have no interest in ever touching. This is a legitimate Carvana style turnaround. Carvana was never a meme stock because Carvana was just ignored. I don't think I ever heard anybody say anything positive about Carvana until it got up above $300 a share. This thing has a chance to re-rate from 50 cents, or, you know, I got in like, I don't know, 80 cents or something like that. Now we're at, what is it today now? 360. I mean, this is the equivalent of Carvana at probably $30 on the road to 400. So we're still early days here and in a legitimate turnaround. And, you know, how fast it goes, I don't know. Like, I mean, my $82 target was originally for 2028, assuming this thing like just did a Carvana in the shadows kind of improvement, tightening the screws, adding more businesses, more revenues and so forth. But with all the focus that this has, and by the way, it's international. It blows me away. Somebody tweeted me last night that they were buying shares from Antarctica. I didn't even know you could buy shares down there in Antarctica.
I didn't know there's anybody in Antarctica. The penguins.
I mean,
the penguins.
I thought they did cruises down there. I mean, maybe it's those like researchers. They're studying the end of the world or something. It's trading stocks.
Eric, we're on the line with Eric Jackson, EMJ Capital, joining us here on a pre-market prep special interview. Eric, when you're putting together your thesis on things like this, and drilling down on the fundamentals, and you see things like rocket companies buying Redfin, that is a comparable company. Talk about the competitive advantages that Open Door could possibly have over Zillow Group, and Redfin Rocket combination.
Well, I think those are all good companies. Rocket's in your neck of the woods, obviously. They're in Detroit and Windsor, big presence. And Dan Gilbert's a great guy. Isn't it interesting that two mortgage guys own two NBA teams? Kind of tells you something about why Open Door should probably get in the mortgage and title business themselves. But I think one of the interesting things that Keith Raboy pointed out on a podcast a couple of days ago was that I think he said something like, real estate is like a $2 trillion asset class, and yet the largest real estate platform company, e-commerce type company, is I think he said Rocket was like, I think he said something like $18 billion market cap. I'm not sure if I got that right, but like basically it's puny in comparison to the size of the real estate market. So it's still like wide open, I guess, is one part of the answer to your question about like who's going to take the mantle. Keith was saying like somebody should emerge. There should be somebody who's like a 50 billion, 100 billion, 150 billion type market cap company, given the size of the market that they're going after. So it might be Rocket. They're well positioned. Why Open Door though? I mean, I think like Open Door is really trying to take this sort of disruptive approach of like cutting the agents out of the equation and building from there, using that as the starting point. But then because it's a platform, like all the other businesses that they can layer onto it. The other thing that's interesting about them now is that they have the market for iBuying to themselves. Like Zillow got out of that business because they were losing too much money. And they had a core business like advertising that they could fall back on. Redfin got out of that business and they went back to brokerage and stuff. And so it's kind of like Coinbase in December 2022. Like the government forced all these other players like Kraken and Binance to get the hell out of the U.S. market. And they kind of, if you had to sort of make a bet, like is anybody going to ever trade crypto again? Maybe a little bit. Well, if they do, Coinbase is going to make a lot of money. And so Open Door has that sort of iBuying starting place. They can then kind of layer in all these other businesses. They can go international. Again, like I'm getting like, the Antarctica guy didn't want Open Door to expand down there, but I got people telling me like, we're in the UK, we're in Netherlands, we're in Germany. We're sick of this like real estate cartel that operates in our country. Can you send Open Door here? And then like you hear like crickets from the Open Door management team in response to this retail uprising. So there's just like so many levers that they can pull, and if they can really kind of get back to their founder DNA and people that kind of know how to build out a Carvana-like platform, I think world's their oyster.
Eric Jackson, thank you so much for joining us here on Pre-Market Prep. It's great to have you on, looking at the fundamentals, discussing what's going on with the stock. If people want to, continue to, to follow this story with you, what's the best way for them to do that?
Best real-time way is probably Twitter or X. So follow me at Eric Jackson. My website is emjcapital.ltd, like limited, and but you'll get all the latest insults towards. Hopefully there aren't going to be many more insults going forward because with this change of leadership. But nice. Follow me on X.
Okay, don't get mad at me, but go Tigers.
All right, I love the Tigers. Love Detroit. I love the people of Detroit are some of the hardest working, best salt of the earth people in all of North America. I have a sister-in-law who like grew up or lived in Windsor forever, and Windsor and Detroit are kind of like tied at the hip. Same people, same good stock. So love you guys.
All right, thanks Eric.
Appreciate it.
Yeah.
That was fun.
Oh, it was interesting because the breaking news right at 9 a.m. So just to recap the breaking news, which Eric has been calling for. He's been calling for CEO Wheeler to step down. He actually gets that. They are well into, so right now, the CEO stepping down. Miss Wheeler will act as so we're looking here. Carrie Wheeler, Open Door Shares, has made the decision to step down from her roles with the company, all effective immediately. Board has elected Eric Fetter, president of Lennar Homes Strategic Investing Arm, as lead independent director. So the CEO search, succession search, is well underway here. It's an interesting story. And I mean, what about the stock here, Joel? Maybe you should break down the technicals really quick here for this stock, because obviously, this has been, some people are calling it the next GameStop. Maybe it is, maybe it isn't, but the story's not going away. I mean, usually you see these things go 50 cents, $5, then it fizzles out, people forget about it, but it's been reignited here today. And maybe today is the day. I have no position in Open Door. Maybe I should take one, because, with this new CEO, Eric seems pretty convicted that this company is a turnaround story, not just some pump and dump. Which, is, it's interesting. It's an interesting story. And I mean, the retail community gets behind something. We saw what happened with GameStop.
Yeah, I think, did you, were you playing this like in just for overnight trades, like in the
we've been trading.
Yeah, overnight trades. Then you sell
now.
it. You sold it too early. I'll just give you an area. I'm just gonna give you, I'm just gonna go to retracements and fundamentals are the fundamentals, but had a big break. Got up to, what was it? That $5 level. Remember that $5 wall, 497. You had a break down to 170. So can the Bulls grab control here at the 340 area?